All right. Yeah, sorry for being a little bit late, but yeah, good morning, fellow traders, and welcome to today's live trading session. Today is May 6th, 2022, and as you guys know, or some of you guys may know, today is non-farms payroll. So then that's going to come out in a little bit. But there's you can decide on what you want to do. Like usually on non-farms payroll, what I used to do, I used to really just stay out of the market and not really trade during that day. But of course, lately we've been able to exploit some good opportunities. Non-farms isn't as significant as a news event as it used to be, but you still want to pay attention to it. You still want to pay attention to the numbers when they do come out because it will play a role in how prices typically move. But with that said, what we're going to do is look at some quick day trading opportunities using this one momentum strategy that we typically, talk about, at the beginning of each session. Now, as you guys know, this is just one of a plethora of methods that we do apply. But it's one that typically works, and we typically start every session explaining a few setups that use this particular method. So then the first pair we're going to look at is the Euro USD. Now, you guys already know today is non-farm, so then you definitely have to be careful with this pair because, when that announcement comes out, it may completely alter what we're currently seeing right now on this particular currency pair. But as you guys know, the market is doing something, but tell me what you see. Like when you look at this chart, what is it that you see? I'm just going to give you guys maybe a few seconds to chime in. But like for instance, should we be buying? Should we be selling? Should we be, or what do you see? Do we see any patterns? Classical chart patterns. What is it that you see based on your perspective? Like, what do you see price doing right now? Like, just tell me, because I want you guys to sort of help with this trade idea. If everything doesn't get out of whack when non-farms payroll comes out. So I'll give you guys a few seconds to chime in. If not, then I'll definitely fill in the gaps and do it for the sake of time. So I know Rob said Euro USD is trading in a range on the 1 hour. And yeah, sort of. You can see it's trading in the range, even though it did break out of this range earlier, but then it came back right inside this range. So, of course, this was a false break. The price came right back down. That was due to, of course, analysts saying that, hey, I think we overestimated that announcement. That move was exaggerated from the previous day when, the FOMC, the Fed, came out with their interest rate statement. And then from there, we saw price continue to slide lower. But yes, we do see that price is, maintaining, this range, so to speak. But, there's a few other things that I want to point out. Let me just say this for starters. I guess I'm just going to go and say it. But based on what price is doing right now, will we want to look for a buy opportunity or a sell opportunity based on what we're seeing right now? Let me ask you guys that question. So then I'll give you guys a few seconds to chime in, and then, I'll go from there. Okay. Well, let me just answer this just for the sake of time. But for starters, we did see price come all the way down in here, but it formed what we would consider to be a W pattern or a double bottom. And price expanded nicely to the upside. This was a strong expansion to the upside. The euro really rallied and gained some strength during the night. And we may touch on that later, but for the most part, what we want to do right now is look at a buy opportunity on Euro USD. Now, bear in mind, we still have that announcement coming out, so then we definitely have to be extra careful. But before we do anything, we first want to see if there is directional confluence. We first want to see if multiple time frames support a bias to the upside. If we can find, out of the 1 hour, 4 hour, and daily time frame, if 2 out of the 3 show a bullish bias, then we could definitely look for a buy opportunity on this particular pair. So what I'm going to do is jump up to the 4 hour, and the 4 hour shows range bound activity, but the 20 SMA is cycling upwards or sloping slightly to the upside. So I'm sort of neutral but slightly bullish. But let's see what the daily says. Okay, now the daily is definitely bearish. We can see that price is making lower lows, lower highs. The 20 simple moving average, which is this blue cyan line, is sloping nicely and sharply to the downside. So then the bias is really to, the downside on the daily. So this is a bearish bias. But what I want to do, for the sake of what's been happening, because, we can consider this consolidation at an area of institutional demand. You can see that at $1.05 at this institutional level. This is where we're seeing price, respect this area and push or consolidate pretty much, right around this particular institutional level or zone. Let me maybe make this more right there, $1.05. So then this area is holding as support, and what it's doing right now, it's in an accumulation phase. It's accumulating buy orders in order to push price to the upside. So that's what we're assuming. We're assuming that price may want to go to the upside. So I'm going to stay with this bias and look for an opportunity to go long on bullish confirmation. So then from here, what we want to do is look to see where price may want to go. Remember, we want to typically buy at where? What do we say all the time? We want to buy at where? Now, of course, okay, I know Adam said resistance, but that's not true. Okay, yeah, okay, so yeah, he corrected it. Support. Okay. Yeah, that's what we want to do. We want to buy at support. So in other words, what we want to do is look to see where support is, try to identify structure, all that good stuff. So then for me, what I'm seeing right here, I'm seeing a few things. For starters, I'm looking at this congestion area right here, and I'm looking at, this structure, right around here. So this is what I'm going to do. I'm going to drop a line right around. Let me do from here. Let me make this yellow. But we're going to define a range, because here we could see that on quite a few occasions this was respected. This area, right here, we see this wick right here. We see price congest sort of, form this cluster region right here. We even see this wick right here. I know it's kind of hard to see. You may not be able to see it on your end, but we see on multiple occasions price respect this area. So then what we're going to do is draw out a zone. So let me do it from here on the way up to this high right here. Right around here. So, what we want to do is wait for price to correct somewhere within this zone, and then we'll look to buy on bullish confirmation and trade this to the upside. So yeah, that's what we want to do. Also, what you could do if you want to play it safe, we could just look at the length of this double bottom, take the height of this double bottom. Usually I like to do the lower bottom to the neckline, or the smaller bottom. So then from this low right here all the way up to the neckline, and that could be our target. So we can probably just target the highs up here just to play it safe. Also, if you look left, you can see that we have this cluster area, right here. I don't know if you see it. Oftentimes these cluster areas could sort of function as an area of resistance or support. In this case, it'll be resistance. So, somewhere around here is where I think price may want to go. So again, maybe we could just place a marker right here just to play it safe. And we can decide to close out our trade right around these highs right here, which is not too far from our institutional level at $1.06. I don't know if you guys see that, but somewhere within this zone is where we could look to close out. So right around there. And let me this right here. So yeah. So again, wait for price to come down into this zone right here and look for a buy opportunity on bullish confirmation. So then that's what we're going to do on this particular pair. But yeah, that's Euro USD. I hope this was helpful. And what I'll probably do later on, if we don't enter this trade during the session, I'll add it to the group channel or the signaling room. So yeah.
Yeah. Good morning, guys. Yeah, I sort of want to just, add something to this. Because, most of you guys know that this is U.S. non-farms payroll report. And, although it hasn't been like I guess the most news driven, or it hasn't created the type of responses that we saw years ago. Of course, analysts are still going to follow it. And even for the Euro USD, it is a US dollar denominated currency pair. So then, there's some event risk there's going to be some event risk premium that's going to be priced into this pair as we sort of wait in anticipation for that announcement. But yeah, we see that the euro is gaining. The euro is primarily gaining due to some undertones from some ECB officials saying that we don't need to wait and lag behind the curve when it comes to rate hikes. We need to start doing it even before the summer, like way before the summer even ends. So then that's creating a lift, even in the midst of the market still, possibly pricing in further rate hikes on the US dollar. And we're going to touch on that a little bit when we get to our, fundamental analysis session. But I just want to point out that, non-farms will be coming out in a few minutes. The market is expecting about 380 to 390,000 jobs added to the U.S. labor force. And if that is the case, then that's going to underpin or sort of reinforces possibly the Fed's commitment to continue that rate hiking cycle, and possibly even contemplate even possibly doing a 75 basis point, because the market is not letting that go from the from the Fed. The central bank on Wednesday said that they weren't considering 75 basis point rate hikes, but according to implied rates and swap markets, um, they're already saying, no, we want 75 basis point rate hikes. And there's already a 90% probability that we'll get that, according to Fed funds futures and swap markets. So then it's going to be interesting to see how the market's going to respond to, or how the Euro USD or even other dollar-based assets are going to respond to the U.S. Jobs data, because that is an indication of growth. In this report, there's both an inflationary component with wage growth and average hourly wages being looked at, but there's also that growth element with whether the U.S. labor force is tight and is it strong and solid. And if it is, then that's going to reinforce the Fed's commitment to be aggressive and give them leeway or wiggle room to be more aggressive. So then, yeah, so I just kind of want to say, just be cautious even with this pair, because even when that announcement comes out, we may see a knee-jerk reaction. We may see that initial post announcement volatility price action chop come in. So then you just want to be cautious and not be compelled to execute a trade right when the announcement comes out. But of course, it's up to you. But just be very cautious on just price action. Like this all depends on what the numbers are going to come out as. But I just kind of wanted to say that, and just use smaller than usual risk management or positioning, even for these trades, especially if they include the dollar ahead of the announcement. So yeah.
So again, of course, this is not farms, so you got to be extra careful with this one, since this is trading with the US dollar in it. So then of course, you can plan for these trades, but be mindful that things could completely shift, once that announcement comes out. So, that's one thing for you to know. Now, this is a 1 hour pullback. So typically what we do, we go down to a trigger time frame and we trade that for confirmation, for bullish confirmation. In this case, it'll be either the 15-minute or 10-minute chart. Let's go to the 10-minute. Let's see how the 10 minutes looking right now. Okay, yeah, this is the 10-minute. So in other words, what we want to see is something like this. Leg A, leg B, and a leg C down here. And if we get that, then we could trade this to the upside. So then that's something that, we would like to see. So, we'll see what happens. Hopefully we'll get a retracement down to this level. But if not, then all is well, all is good. You know, if you place those two trades that we told you to place last night, then you're pretty much good for today. You don't have to really do anything because those were two pretty solid, nice trades on both the Aussie USD and Euro Aussie. So you don't have to feel compelled to execute a trade. You already made your money for today, but if you want to make some extra, then of course you can look for some solid opportunities during the US session or the New York session. But for the most part, you are, or you should be good. But anyways, we're going to look for this three-way pullback, maybe down into the zone, and then look for a buy on bullish confirmation. So then this is the Euro Aussie. So are there any questions before we move forward? Going once, going twice. All right. So I guess we could move on. What time is it right now? I know the announcement is going to come out in a few minutes. So I'm going to ask Marvin, did you want to share a few things first before that announcement comes back? And then we can always come back to these setups. But I just want to give us some time to talk about what may potentially happen during the announcement. And then from there, we can come back, look for some more day trading setups and do some top-down analysis and then call it a day. Yeah. Well, yeah, I know that we haven't met since Wednesday. There's a lot to cover. A lot has happened since Wednesday, but I'm just going to make it brief because for now, we just want to talk about the jobs data and what to sort of expect out of that. And if we have time later on, we may cover what else is going on or what other themes are developing in markets. But just like Melvin said, this is non-farms, and this is happening during an interesting week where we saw a lot of event risk. There's a lot, central bank meetings. We saw the price action from Wednesday. And then we saw the post announcement or post FOMC price action where we saw a complete unwinding of that trade. We saw that bear market rally following the announcement on Wednesday. But on the day after, we began to see a complete reversal, a complete moving of VIX and the pickup of volatility back up above 30. Let me just go right here to our VIX. We began to see it pick up and get right back up into the 32 area. It still didn't breach the highs up here from Monday, where we saw, it at like 36. And this is the area that we need to be really alarmed with. But the fact that it is moving high should also add to the caution and even to allow us to be aware that, investors are hedging themselves because they expect the markets to tumble lower. Due to what we see happening with economic data, due to signs of slowing growth in the PMI data. And if we do get, let's say we do get, weak labor or jobs data number, then that can also be a bad, omen in a sense, because then that will highlight that there's possibly stagflation, or we're seeing greater signs of stagflation, because there has to be three criteria fulfilled in order for markets to be labeled as stagflating or in stagflation. And that's, we got to see rising pricing pressures or inflation pick up.
We have to see signs of slower growth in the economy, but also we got to see a labor market that's soft and weakening as well. So if we do get a non-farms payroll number that falls short of the expectation, then that could be an indication that we're in stagflation, and that would be very hard for the Fed to navigate. That's like the worst case scenario for the Federal Reserve to have to really address and fulfill their monetary policy obligations. Even in that type of environment, that's a very tough environment to deal with, because you don't want to hike rates to address inflation, but as you hike rates, you end up exacerbating the slowdown in the economy. So then you have both ends of the pendulum to work with, where you have to work in such a sensitive manner to not overshock the market into recession. But you also have to deal with the rising price pressure seen with inflation picking up. So then that's the worst case scenario for the Federal Reserve Bank if we do get soft labor data or soft numbers. But let's go to the calendar, the economic calendar for today. I'm thinking about going to investing.com, www.investing.com, and let's go to our economic calendar. And let's just go through this real quickly, because I also want to talk about dollar pre-positioning ahead of this announcement. So then let's go all the way down. I know we have Canadian employment data coming out as well around the same time. But yeah, so we have a slew of data coming out in 5 minutes on both the US and the Canadian economy. But we see this labor data coming out, and the headline figure is for 391,000 jobs added to the labor force. And although that's less than the previous number of 431,000 jobs, that's still, some solid jobs growth or increases in jobs. So then, that's signs of a healthy economy. We have a strong, robust labor market where, we're adding about 300 plus thousand jobs to the labor force, or jobs to the labor market. We have unemployment at 3.5%, which it's expected to tick lower to 3.5%. That's signs of a strong and solid labor market. So when the labor market is strong, the Fed can feel comfortable hiking rates if they know that it's pretty strong, though. Participation rate, which is really, an indicator or a metric that is really questionable, because when you look at how they get this number, it's not pretty much it's not really reflective of the labor workforce and how many are really participating in the market. They only take the number or survey those that have been job searching, or either those that within the past 6 months have been either working or actively looking for work. So, there's some people, in our country, or in the US, that has sort of just chosen to not work. So then they're not even included in these numbers, which is a whole nother story in itself. But of course, it's going to be interesting to see this as well, because this would let us know if the market is functioning, or if the economy is functioning at a certain level of capacity. But we have all this data coming out. Uh, but yeah, we got to also pay attention to average hourly earnings, which is an inflation barometer, because we need to see that wage growth pick up along with inflation. Right now, we're seeing inflation really, like the headline, just standard inflation at like 8.1%. So then we need to see a pickup in wage growth to sort of help curb or compensate, especially on consumer side, when in the area of consumption. Like, we need people to have more money in their pockets to deal with the higher prices. So then we got to pay attention to this data as well. So really, to be honest with you, considering the market environment we're in, and just what's going on with macro conditions, like, we do need to pay attention to this report. Now, we may not get the type of responses that we used to, but we got to keep in mind that this week was a week of like illiquidity. Like, the markets were not as liquid, or there wasn't as much volume as previous weeks, even though we saw a lot of choppy movement and volatility pickup. When you really assess this, just the markets across the board, volatility and the volume was still fairly low. This was a holiday week. Some traders or investors may have chosen to sit on the sideline and just sit in cash, because there was all this these risk events that were on the docket. But but yeah, we just going to see how the dollar responds to this. Now, let me just go to real quick. Let me just pull up the Dixie just to see what's happening with the dollar. I think we know that the dollar is currently, you could say, softening or weakening, along with yields. Let's see what US 10-year yields are doing. We see that that's, pulling back as well. Nominal yields. We may touch on real yields in a little bit because they're in positive territory. Real yields are, they're out of negative territory and back positive. So then that's going to put pressure on equity markets. It's going to put pressure on metals like gold. But of course, since we're seeing a pullback in nominal yields, that's going to underpin hard commodities like oil for this session. But yeah, let's see what these numbers going to come out. I know we got 1 minute left for this to come out. I think what's going on? This is sort of locked. Wait, hold on for a second. Having some issues real quick. Let's see. Yeah, I don't know what's going on. Yeah, like the chat box we have up here is stuck. So it's hard for me to see this calendar. I know you guys can see it on your end, but it's hard for me to see it. Let's see. Okay. Why is this acting like this? Okay. Yeah, I'm moving it right now. Do you see it? Okay. Yeah, I think we're having some issues right now. Okay. Yeah. Yeah, let me know if you guys can see the screen. I know it's stuck right now. Okay. Let's see. Yeah. Yeah, for some reason, man, let me just do this. I don't know what to do because these numbers just came out right now. See that. No, keep that up. Then go right here. See this. No, it's not. It's not, Bevan. Yeah. So then yeah, for some reason the screen share just is not even pulling up. So then this is interesting. Let me just stop sharing and then reshare again. It's not even allowing me to do that. Okay. All right, let's see. Yeah, because this is like I just wanted to see wanted to lead you guys through that initial response, but yeah, we gotta we gotta close this. It's not. Okay, here we go. Yeah, we may have to share it another way now. Like for some reason, I don't know, just like actually for the past day, we've been having some interesting um, internet issues. So let's see. Okay. They can still see it. They'll hear us on their end. And then just get it in. Okay. So let me know if you guys see this chart. Okay, yeah. All right. Okay. So we're seeing a pickup in US 10-year yields right now from the low. But let's go and review these numbers right here because we didn't get a chance to. But as you can see, the number came out actually a lot better than anticipated. We're seeing 428,000 jobs added for the month of April when the market only expected 391,000. So this is real supportive for the Fed's monetary policy stance to sort of remain hawkish and even give them even greater comfort in the green light to say, okay, let's continue tightening monetary policy. Let's continue hiking rates. Let's maintain our hawkish position. So then we see right here, jobs growth in April was 428,000. Um, and we saw the interesting thing is that unemployment. You know, even with the unemployment rate, it's not that big of a miss. Yes, it's the same as the previous month, as March's figure. But to be honest with you, this is not that big of an adjustment or that big of a discrepancy from the forecast. It just, 0.1 percentage point lower, but I mean higher, but I mean it's still, still decent. But when we look at average hourly earnings right here, um, we didn't really see a huge pickup in average hourly earnings on a year-to-year basis. It's still at 5.5%, sort of, remaining flat at that level. But we only saw it pick up by 0.3% on a month-to-month basis. So, we're seeing a flattening of that inflationary component within wage growth, which could also indicate that are we seeing signs of inflation peaking in certain cases. When we do look at 10-year break evens, which we may touch on, and 5-year break evens, we're seeing that inflation is currently coming down. But but yeah, so this is the US labor market data. So then how did the dollar respond? Let's go back to the Dixie right here. Let me just do this right here. Let's go. And we can see that the Dixie is selling off. Let me just go to the 5 minute right here. We can see that the dollar is sort of weakening. It's continuing its slide lower. And it could be just, as business as usual. The dollar has reasons to want to sell off, especially as we head into the weekend. There's an unwinding, there's a continuation of an unwinding of that pro dollar position or trade. So then we're seeing some softness in the dollar, but we got to keep in mind that the announcement was just released 5 minutes ago. Typically, we'll see, economists, analysts, investors sort of read through the labor report and sort of you'll see that volatility play out within a 10 to 15 minute time frame after the announcement, and you won't really know for sure the market's true positioning of the dollar until maybe the turn of the hour, like close to 8 or 9 a.m. Eastern, when right ahead of the Wall Street open. But this was a solid labor report. Let's see what's happening to US futures markets. Here is S&P futures. We saw it tick lower, but let me just go to the daily time frame right here, and we can see that it's still, negative. It's for the day. Let's just do this real quick and just go through all of them. Let's go to the Dow E-mini futures and daily chart, and we can see the same thing. We can see that, of course, it's still negative, still moving, lower. And let me just do the third one. Let's do, I wonder, should I do the Russell or the NASDAQ? Well, let's see. Okay. So yeah, we're seeing the NASDAQ, futures, E-mini futures move lower as well. So then, it still seems as if the market is still holding on to that negative risk sentiment from yesterday. We're seeing it pass over into today's session. And it seems as if for this week, the market really wants to close possibly in negative territory. But as you guys know that have been trading, anything can happen, especially right before the close of the week. We may see a run in the markets, or we may see sort of like a relief rally into the close. So anything is possible, especially in this type of market where volumes are low. It gives room for a lot of that volatility, chop to come in, those exaggerated swings in the market. So then we see that futures is traded to the downside. And I want to also go over, the currency barometer, because beforehand, we used to, of course, show you guys. You can go to FinViz, which is quick. You can use that. You can, go to futures to sort of get an idea, just a quick glance of what futures markets are doing. And as you guys can see, we're seeing a pickup in oil, we're seeing a pickup in the VIX and gold, et cetera, et cetera. But and then if you go to the Forex side, you can see this currency spectrum that is really a measure of these currencies' relationship or performance against the dollar. So then what I want to say here is that according to this particular currency spectrum, we see that the euro and the Kiwi are the two strongest currencies for today. The euro, Kiwi, and Aussie are gaining strength. The Aussie and the Kiwi are benefiting from their central bank's hawkish position. And of course, the RBA was surprisingly hawkish early this week when they had their interest rate announcement on Tuesday. But we can see that these currencies are strong, whereas the weaker currencies are the pound, the US dollar, and the Japanese yen. So then we see that right here, but I want to point out that there's another way we can also assess currency strength that doesn't carry as much of the how could I say it? There's a lot of variables, or there's a lot of factors that go into the valuation of the dollar. And of course, we know that the dollar is influenced by monetary policy. The dollar is influenced by, even business dealings. Just there's a lot that goes into the exchange rate or the value of the US dollar. So is that a good currency to sort of assess currency strength and currency performance? Like, when it comes to currency comparisons, is the US dollar the best? So then what I want to talk about another indicator that we could use on your chart to sort of get an idea of what the currency strength is. So then what I want to do right here, I want to go to XAU right here. And then I'm just going to do this right here for the, go to the line chart. I know that we have these, but yeah. And then let me do this real quick right here. And I'm gonna pull up the gold multi-currency performance right here. So right here, it's pretty much the gold multi-currency performance. Or what this does is that, like, gold is sort of like a set, metal. It has intrinsic value, and it's not as influenced by so many variables as the US dollar is. So sometimes the best way to sort of assess the strength of a currency is by measuring its performance against gold. And so then on this particular chart right here, we have this gold multi-currency performance where we can get an idea of which currencies are truly weak and which currencies are strong. So when it came to the strong currencies, we knew that the euro was the strongest according to the US dollar spectrum on FinViz. But what is it now? So then when we look at this, we can look at this color code right here to sort of identify which currencies are strong and which currencies are weak. Now, I'm gonna, eventually walk you guys through or create a video tutorial on how to set this up on TradingView if you want. But right here we can see that the bottom currencies from the bottom up, like the bottom currencies are typically the strongest, simply because it's lower. It's lower than these other values. It's pricing in gold is lower. So then right here we have this purple color, which is really the euro. It's pretty much the same as what we saw on FinViz, and we see that that's the strongest, followed by the Kiwi, this cyan or color, and then we have this like orangish pink level in the Aussie. So really, to be honest with you, it's about the same. Um, but this could be a little bit more accurate. So we have the euros the strongest, followed by the Kiwi, and then the Australian dollar. Those are the three strongest currencies for today, which is the same as what FinViz shared with us on their one-day relative performance. And then we see here, what are the weakest currencies for today? Well, right here, we got the Japanese yen, which is what we saw on FinViz, followed by the pound, which we know the pound is weakening. And then after that, we have the US dollar. The US dollar is fairly weak. So then this is a little bit different because I think we didn't see that US dollar being one of the weaker currencies We saw it somewhere in there within that range on FinViz, but we didn't see it as one of the weaker currencies. But you can see here that it is. So this is just another way of sort of assessing the actual true valuations of currencies without all of the signals and variables and factors that influence the dollar, because there's more things that influence the dollar and the valuation of the dollar than gold. So then it could be the signals can be kind of slightly off when it comes to the currency comparisons. But if you compare it with gold, who's pretty much, it's just a standard metal. It's not, even though it's influenced by monetary policy to a degree, but when it comes to yields and interest rates, it's not as influenced to the same degree, I should say, as how the dollar would be influenced, by with rates and stuff. So then, this is just another spectrum, currency performance spectrum, that I think would be good for you guys to add to your trading view platform. And in our new Discord group, I would be sort of listing or tutorial to sort of help you guys form this in your on your trading view account. So yeah, so of course, make sure if you haven't already that you move over to the Discord group, Discord channel. I posted a link in the Telegram channel so that you guys can, migrate over and actually join and participate with that. We're going to be uploading a lot of content in that group and, do a lot. So yeah, so hope to see you there soon. But yeah, I just kind of wanted to introduce this to the group for now. But let's go back to our standard template, and we can go back to our candlestick chart right here. And yeah, and then yeah, that's pretty much it. But yeah, like I can pretty much talk about fundamental analysis for hours. But what I want to do, I want to turn the mic back over to Melvin. We just saw non-farms payroll come out, and if we do have time, we may touch on some other issues later on. But I know Melvin has a few top-down analysis setups and possibly even day trading setups to really still discuss for today's session. So we are seeing dollar weakness. We're seeing gold pull back and soften, which is pretty much its response to yields. I think we're seeing well, I don't know. Yeah, we'll talk about this later. But yeah, I'm gonna pass the mic back over to Melvin.
Yeah, all right, guys. So then, yeah, what we're going to do, we still have a few more setups that we want to look at. But before I do that, I first want to go and see how that Euro USD pair is looking. So let me go to, I believe, let's do the 1 hour chart. And do we have to change this template? Yeah, let me just expand this out. All right, so let's go to Euro USD. So see how that's looking right now. All right, so as you can see, it seems like it went up, found resistance, and now it's coming back down. Looks like it may want to correct lower into this area. But yeah, what time is it? Yeah, so then yeah, we just had pretty much like maybe 15 minutes passed since this announcement came out. So we may see what we've been wanting to see, which is this pullback into this area, which means that for some reason right now we see some US dollar strength, and price may want to correct a bit deeper into the zone. But I'm going to do something. Let me drop down to the 15-minute, see how things are looking there. Okay, yeah, this is the 15-minute chart. So yeah, it's going to be interesting. Like, I don't know if we'll be able to get in on this one, mainly due to how things look. But if we do see a nice retracement into this zone or into this area right here, then we'll definitely look for a buy opportunity. So then let me just put a price alert right here, and let me just say May 6th. Let me just put the date, and then just say price is near 1 hour structured support. Price is testing or near 1 hour structure support. Drop down to trigger. Look to buy on confirm. All right. Yeah, we'll come back to this. If we do see price hit this area, then we'll definitely pay attention to this particular setup on Euro USD. All right. So with that said, let's move on. I think there was a few more pairs, or for the sake of time, I may just do one more day trading setup, and then from there we could do some top-down analysis. So then the next pair we want to look at right now is a pair that we actually executed a trade on last night. I wish we would have held this out because we saw price really expand to the upside, but it's Euro Aussie. So yeah, well, price came down to exactly where we wanted it to come. But long story short, this is a bullish environment. We see that price is making higher highs, higher lows. And we definitely want to look for an opportunity to buy it. I think the last time we talked about this pair, we talked about this setup. I don't know if you guys remember. We drew this trend line. We said the price retraces all the way up to retest this trend line, look for a sell. And as you can see, that is what happened. It was perfect. Price slid to the downside and it hit this particular target area. So of course, like when we go through these setups, just monitor these setups on your own as well. Like, don't depend on us to tell you every single time when price reaches an area, when to enter a trade, because we could be busy. We could be doing other things. And that's the reason why we do this analysis, so that you guys could at least know what to do when price gets to a certain area. You can decide if you want to execute that trade. But yeah, this was a short. Yesterday we entered a long, right around here, I believe, somewhere. And then price expanded to the upside, but now we're looking for another buy as well, since we're still in this bullish environment. So yeah, so we're in this bullish environment. Let's see if there's direction of confluence. So we see that the 1 hour is bullish, 4 hour is looking bullish, 20 SMA sloping upwards. We have this nice strong correction or impulse, you could say, to the upside. Let's go to the daily, and the daily is looking bullish as well. Plus price formed what type of pattern? I'll let you guys answer that question. What type of pattern formed on the daily that could sort of give us a clue that we could see a little bit of some movement to the upside? Okay. Yep. Adam said it. And inverted head and shoulders. Joe said it. And yeah, the both of you are correct. We do see an inverted head and shoulders. We see left shoulder, head, and right shoulder, and price may want to expand to the upside and at least test this institutional level right here. So then that's something that we could potentially bank on. And if you look at this correction lower, we have a three-way pullback. We have a leg A, leg B, and leg C, and now price could be in its true expansion to the upside. So, we could look for an opportunity to buy on this dip in price. So as you guys know, price already hit this area, and we may be a bit late. If we were to look at this prior to us going, okay, I think we're having a connection problem right now. Yeah, I think we have a connection problem. Let me know if you guys see this mouse moving. Because I think we may have a connection problem. Yeah, I think we may have a connection issue. Let me end sharing and start it up again. So let me do this all over again. For some reason, this software is acting kind of funny now. Yeah, because I don't think it's the internet, because we could still go through the Windows browse. We can still browse. We can see price move on our end. It's just that they can't see it on their end. But yeah, let me know if you guys see it. See the chart right now. Let me know if you guys see the chart. Okay, and if you guys see my mouse moving. Okay, so I guess we do. We're good. So what I'm going to do is expand this again. All right. So yeah, we may have missed out on this setup because this is what we were looking for. We were looking for price to come into this zone, this area right here, and we were going to look for a buy opportunity if price could reach this area. And as you can see, we have this wick down into this area, and it looks like price may want to expand higher. So then we may not be able to get in on this buy setup. This was one that we were definitely looking at on Euro Aussie. You know, it was had nice directional confluence, like all the time frames supported a movement to the upside. But as you can see, price bounced higher from there. Let me go to a trigger time frame. Let me do the 5 minute, see what's going on. So then this is the 5 minute chart, and yeah, it looks like price may want to strongly push to the upside. So you know, I'm not going to force anything. I think I'm going to relax and not trade this pair, even though we may see something like this where price corrects back down into this area and we could see an opportunity to potentially go long. But I'm going to just hold off on this one for now, and maybe just wait for something that's a bit better. It's okay, you know, to miss out on an opportunity because it's going to happen a lot. You know, that's one thing you have to understand about trading these markets. You're going to plan for setups to happen. Is, you know, you're going to plan for hours, maybe even days for setups to form. That when the time for you to enter that setup comes, you won't be able to enter it. So then that's the thing. That's for some people it could be frustrating. But if you've been trading for a while, then you would know. Okay, so price is testing or near our 1 hour structure support. So you know, that's on Euro USD. So what we could do is go there quickly. Um, let's go to Euro USD, see what's going on. Okay, so we can see here for the Euro USD, it's still heading lower down into this zone right here, which is, you know, quite interesting because what that tells us is that the move higher on Euro Aussie is primarily due to the Aussie dollar selling off. So we definitely see the Australian dollar selling off at the moment. But what I'm going to do, um, I'm going to, okay, so it hit the zone. What we also see is what appears to be a three-way pullback, leg A, leg B, and a leg C right here. So what I'm going to do, I'm going to see if we can get in on a bullish confirmation. So what I'm going to do is wait for price to break and maybe close above this area right here, this cluster area right here. Maybe we could, well, I think we're good right here, maybe right around there at $1.05, 70, 1.0570, you could say. But let me change the color of this. So then right now, if I was to enter a buy, I would wait for price to break this high first before I consider going in on this particular buy setup or buy opportunity. So then that's what I would do. But you know, we never know. Price could be, you know, pushing lower. It may even form new structure right here where we get this move lower and then price comes back up and then comes back down, forms new structure, and then it could break to the upside. So we could see something like that happen as well. But what we're going to do is wait and be patient. And I'm not going to do anything until I see price break this level to the upside. So then let me add a price alert. Just say, of course, put the date, May 6th. And say break and close above structure buy on retest. All right. So yeah, that's what I'll do. And we can plan in advance. Oops, yeah. Okay, let me re-edit this right here. I should have said crossing up. Crossing up once per bar close, and then save it. Yeah, we made a mistake right there. So yeah, it should be fine right now. Let me check to make sure it's okay. Yeah, crossing up once per bar close. Okay, save. All right. So then what we can do right now is also prepare for a potential long position if we do see a break and a retest. So then what we can do is just say, hey, let's assume that price. We're going to enter our trade right around here. And our target will be, somewhere, right around here, right before this institutional level of $1.06. But then that gives us a 1-to-1 reward to risk ratio. So yeah, like we definitely want a 2-to-1. So then we'll or at least a 1.5-to-1. So we'll adjust this as time goes. But as of now, I have it right here at 1.5. If we do see a break and a retest, then we'll enter a long. So then this gives us about a 16 to 17 pip stop. So then if you want to, you could prepare for that, get your position size ready just in case this does happen. So yeah, that's something that we'll be looking for on this pair, and we'll be looking to target $1 1.0596 or 1.0597, that area. So again, if price does do this, break to the upside, come back to retest this area, and then we can look for an opportunity to buy and trade this higher. So that's something that we'll be looking for right now on the Euro USD. So all right. Okay, with that said, I guess we can move forward. I know I did have one more pair, but day trading setup, but I don't think I'm gonna do that for now. Let me just see how it's looking. I believe it was US dollar Nook. Let me see. US dollar Nook. Yeah, it was US dollar Nook. We was looking for this pullback right here. But this pullback looks pretty strong. So I'm a little bit iffy on whether or not I should take it. But let's go to a 10-minute trigger. Okay, so we see this double bottom right here. Okay, so going back to the 1 hour, we see this pullback right here. So then there's a few things we want to see. For starters, we want to see whether or not there's a 3-wave pullback. We want to see a 3-wave pullback before we enter a sell order. We know price is hitting structure. Look left, structure leaves clues. As a matter of fact, we could do this now. Let's do it from here all the way up to here, this structure area. So we know that price is hitting structure right now. So typically we'll be looking for a sell. But we need to be a little bit cautious. For starters, stochastic is still near oversold territory. Also, if you drop down to the 10, let me ask you guys this question. Do we see a 3-wave pullback? Yes or no? Do we see that 3-wave pullback? Yes or no? I'll give you guys a few seconds to chime in. If not, then I'll answer the question for you. But it's pretty simple. Okay. Yep. Stuart said no, and Adam said no. Yep. And the both of you are correct. We do not see a 3-wave pullback yet. We typically want to see something like this: leg A, leg B, and another leg C, maybe up here, and then from there a sell. But we don't see that yet. So I'm not gonna be so quick to pull the trigger right now. Now, bear in mind, price could very well push clean to the downside from here, and we can miss out on this setup. We could do something like that and then continue heading lower. It could very well do that. But for me, I have some clear, precise rules that I like to follow. And if you just stick to a certain plan and stick to it to the T, don't deviate from it, then you'll find yourself being a lot more consistent with your trading. But anyways, we'll be looking for this US dollar Nook. We just need to wait a little bit longer to see if we can get that 3-wave pullback. I believe it's going to push higher. It could possibly push higher to even retest these highs right here. That's something that could very well happen. So, we just got to know that and, plan accordingly. All right. So with that said, I guess what we can do is we could look at this first pair that we're going to do some top-down analysis on. And then we may look at some stocks as well or ask questions. See if you guys have any questions in regards to stocks. But all right. So let's go to for one, let me go to the weekly time frame. And then from here, I want to go to the CAD Swiss franc. All right. All right. So right now we're looking at the CAD Swiss franc, and we're currently looking at the weekly time frame. And as you guys can see, if you could look on this pair, we've been pushing to the upside for a number of weeks. We can see these bullish candles, even though we can see candles with wicks on both sides. The price action on a smaller intraday time frame may be pretty chaotic, but for the most part on the weekly, we see these bullish candles to the upside. So, we were definitely in a bullish rally, a bull rally on this pair CAD Swiss franc. And if you look at where price paused at, it paused at this level right here, which is what, guys? You guys know the 77-cent level. You don't have to explain it. Of course, we already know what that is, especially for those who's been with us for a while. You would know that this is what we call an institutional or psychological level or zone of resistance. So price sort of found resistance right around this area. But what we want to do is do some more technical analysis. So then, this move right here, we can see that price pushed up, started consolidating, and then it broke to the upside, almost like a bull flag pattern. But what we can see right here is that price gave us, let me do it from here, almost like a measured move expansion. And let me do it to the lows right here, right around here. This is almost a one-to-one measured move expansion, where we know that somewhere around this particular area, we're expecting for a rotation in price to happen. So, right around here, we're expecting for the sellers to come in and help push price lower. So then that's what we're expecting on this particular pair. But if you look at last week's weekly candle, not this current week, but last week's, we see that last week's candle had some indecision. It had wicks on both sides. You can call it a spinning top. Some people call it a doji like candle, but whatever you call it, as long as you can identify that, there was a range that was formed and price created a high and a low, and there was wicks on both sides of this candle. As long as you know that this is like speaks of some level or some form of indecision, then that's all you need. So then, one thing we could assume is that price may be in the middle of a slowdown right now, and we could see price reverse shortly. But this is on the weekly time frame. And we see this one-on-one measure move up into the zone. Also, stochastics is overbought. So then that's something that you need to pay attention to. Remember, whenever price hits a weekly or daily level, and whenever stochastic is either overbought or oversold, then that's when you need to look for signs of consolidation and reversal. But anyways, let's move to the daily. All right. So then right here on the daily chart right here, what we see right here is price expanded to the upside, but we see what appears to be a daily measure move expansion as well. We see this leg right here. And if we was to drag this right here and put it at the lows, we can see that price is also providing a daily measured move expansion to the upside as well. This is a one-to-one measured move expansion or one-to-one measured leg to the upside. So, this is something that could give us a clue that, hey, things may be shifting. Also, we see stochastic is overbought as well on the daily. So then we have price hitting weekly resistance on this pair or this institutional area of resistance, And on both the weekly and daily, we see that stochastic is overbought. So then whenever you see that, then you definitely know for certain that a reversal may take place really, really soon. So that's what we're going to assume. We're going to assume a reversal is going to take place really, really soon. So yeah. So right around here, we see that we have these candles forming right now. We see the sideways price action. Let me see if I can move this right around here to this first one where this low is right here. Because if we zoom in right here, we can see that, ever since May 4th, we've been seeing price maintain this range pretty much. So what we could assume is that if price breaks this range to the downside, then we're in a bearish environment. You could look for a sell opportunity. So then that's what we can assume. But anyways, let me just zoom out and go to the 4-hour chart, and let's see what's going on. All right. So yeah, this is the 4-hour chart right here. Let me add this right here. So what we want to do is look for price to rotate lower. And let me remove this because we don't really need this right now. We don't really need this right now. But what we're expecting is a rotation lower. So what you could do is simply wait for price to break this low right here of this consolidation, because really this is the true low that you really have to pay attention to, right around here. This is the true low. And if price breaks this low to the downside, then that's when we'll look for an opportunity to sell. So of course, we're banking on that happening. But if price breaks this to the downside, then we'll simply wait for price to retrace, retest this area. What was once support will now become resistance, and then we'll look for a sell on bearish confirmation. And your sell, okay, it broke to the upside. Euro USD, let's hurry up and go there. What was that, the 10-minute or 15-minute? I can't tell. 10-minute. It's 10-minute. Let's go to Euro USD. Okay, it broke to the upside. So if we get this retest, then we can look to go in. Yeah, I didn't even calculate things myself. Let me let me see. Let me open up this app. We may not be able to get in on this, but all is well. So then right now we'll look for a retest. Let me do, I guess we have about, 17 pips, you could say, 16.6, 17 pips. Let me just do 17 just to play it safe. And I'm going to put, yeah, all right. So what we want to do right now, we can actually change this alert. We can be notified whenever price comes back to retest this area. So then what I want to do is modify this alert right here. And I'm going to say crossing. Then we're going to only once. And then we could say price retesting structure by now. Stop loss 17 pips. Yeah, and it's right there right now. So if you want to, you could enter right now your buy. So yep, you can enter your buy now, and let's see what happened. You can see that price responded. So yeah, you can enter right now. So yeah, we're actually in this trade right now, and what I'm going to do is just close out right when price reaches these highs again at 1.05966. We can just do that just to play it safe, do it a few pips below this institutional level. So let me do that right quick. So hopefully this hits the target. 1.0596. All right. Yeah, and we already made enough money. As far as if you took those trade opportunities from yesterday. But if you do decide to go in on this one, you can go in maybe with a little bit of a more smaller position size. It's up to you. But of course, we're already in this setup right now, and we'll see where it goes. So yeah, but hopefully we can get a continuation of this move to the upside. But if not, then oh well, we'll get stopped out. So it happens. But yeah, all right. So yeah, I don't have any more questions, so or anything more to talk about when it comes to this particular setup. So where were we? I think we were we on the CAD Swiss franc? I believe, yeah, I believe we were on the CAD Swiss franc, right? So let's go back up there to the 4-hour CAD Swiss franc, and let's see. So yeah, what we want to do in this particular case, what we want to do, we want to wait for this to happen. Once price retraces up into this area, we want to look to sell on bearish confirmation and trade this to the downside, possibly maybe to this structure area right here. But that's what we're going to look for. We're going to look for something like that to form. So again, let's do that, and let me change the color. And yeah, we'll be looking to sell. If we can get this break to the downside, pull back to retest support as resistance, and then we'll look to sell. All right. So yeah, are there any questions? Going once, going twice. Okay, so I don't think there's any questions. So what we can do, what time is it? It's 8:14. Okay. Okay. Yeah, we don't have to do this one. I was going to do one more pair, but I guess we can transition now and ask you guys if you guys have any questions in regards to any asset you want us to look at, stocks, commodities, whatever you want us to look at, even a currency pair. If you need us to look at a currency pair, we'll definitely look at that. But yeah, we definitely want to help you guys out. So then, just let us know if you guys have anything that you may want us to see and observe on our end. So yeah, we'll give you guys the opportunity to chime in. Okay, if not, then we can potentially end early today, because I don't have anything extra that I could share in regards to stocks. I don't know, Marv, did you have anything you wanted to share in regards to stocks, or no? Okay, I know there was, if you have time to look at silver chart for potential downside. Okay, yeah, let's look at the silver chart. So let me go to, I'm going to start at the daily on this one, and we're going to do XAG USD. Let's do, all right. So right now we're looking at silver. Right now we're looking at this from a daily perspective right here. Let me see if we can also go to the weekly as well. Yeah, this is the weekly chart right here. So then what we see here on silver is that we can see that price is approaching this area of weekly demand right here. Look left, structure leaves clues. I know you guys heard this over and over again. Many people like to say that. I think this was popularized by, the Trade Empowered group, Akil Stokes and them. They coined that phrase, look left, structure leaves clues. So, of course, a lot of people use that right now. But what we see right here is that price is testing weekly support or a weekly area of demand. And every time price hit this area, we saw a nice bounce to the upside. So, there's a possibility we could see something like that soon. But price is just now testing it, and we could still see another push lower into this zone before we see price bounce higher. But we have to be aware of where the zones of supply and demand are. So we see that on silver, right? So if you go down to the daily chart right here, we can see that, of course, price was consolidating up here, formed this expansion to the downside, and we see for really the past few days, price has pretty much been moving sideways for the past few days. So if we zoom into this particular area right here, Um, what we can see right here is that we have this range bound price action, but price is definitely forming a accumulation type setup. So from here, what I want to do, I would like to see price push up and break this area. That's what I would do. But I know you was looking for a sell order, and yeah, it could happen, but based on how I trade, I probably wouldn't do that, mainly due to the fact that we're in this area of resist or support right now. But anything can happen. Let's drop down to a smaller time frame to see what's going on because um, well, let's see. Let's go to the 4 hour. Okay. Yeah. So yeah, on the 4 hour, it looks like we could see more downside because what could be forming right here, we see right here, boom, 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 and we could be seeing what you would call a head and shoulders continuation pattern, which means that price could very well push to the downside and push deeper. It can give us a nice measured move expansion to the downside. In other words, from here to here, and we can see price expand all the way down into this zone, a little bit deeper into this zone. So then there's a possibility for this to go slide downwards as well. So yeah, that's something that we definitely have to take note of. But yeah, we do see that on silver. So yeah, there's that possibility. But I know for me, I would probably just maybe wait a little bit. But if you want to, you can. Right now, we're still at support. You can see these wicks right here from these candles, these wicks on each of these candles, these 4 hour candles. That tells you there's buyers there. So, we may want to play it a little bit cautious. But if you do scalp, like in this case, if you drop down to the 1 hour and you traded this 1 hour correction, then you can probably get in on a nice quick sale.
So yeah, and also, on an intermarket basis, I know we don't touch on this as much, but silver has a very tight correlation with uranium. Like whenever uranium moves up, you see silver follow along and move up. Whenever you see uranium slide, you typically see silver slide as well. So then sometimes you can use uranium as a leading indicator of what to do. Now, there are times when that correlation decouples and it doesn't, remain constant. But like I would say, if you're looking for that extra layer of confirmation, then you can just pull up your uranium. I know this is the 1 hour chart. Let's go to split the screen. Let's keep this right here and let's just go to uranium right here. So just to see what happens. So that's the daily. Let me just do this right here and go to the 1 hour. So yeah, so this is the 1 hour. Right now we're seeing this is interesting how it's coming up. But yeah, like normally I look at it at a more macro, more wider point of view, but typically what you want to do, you know um you want to see if there's agreement. Like right now there's it's in consolidation. You could say it's it could potentially slide lower. One thing we do know, we got this sell off right here, and it could possibly continue with another tumble lower. But also what you can also do is you can look at what's happening with 10-year yields. Even though 10-year yields is more closely associated with gold, nominal yields, if we're seeing a pickup in nominal yields, then that can also put pressure on silver as well. So then let's do this right quick. And I think we are seeing that. Let me just go to the candlestick chart and go to the 1 hour. And as you can see, we are seeing a pickup in yields right now, in the interest rate expectations right here, or inflation expectations. That's what I mean to say, inflation expectations. So then whenever we see a pickup in inflation expectations, or when we see the 10-year nominal yield, which is really reflective, well, it's not real yields, which we should talk about too in a little bit, but yeah, that's going to put pressure on gold. There's an inverse relationship between inflation expectations, higher inflation expectations in gold. So then, we should see gold slide lower, as treasury yields pick up and move up to the upside. But yeah, and we can potentially see the same thing with silver because it is a precious metal, and they don't move in sync all the time, gold and silver, but there is a sort of still tight correlation between gold and silver. You know, they have a level of beta, with each other. So then, yeah, that's what I think. So yeah, yeah, you're welcome. You're welcome, Rod. Yep, yep. Thanks for coming. Thanks for showing up.
Yep. All right. So yeah, I guess what time is it? Yeah, I guess that's it. Unless you guys have any more questions about anything that we've talked about, or anything that you may want to know. Now's the time. If not, then we can definitely close out and call it quits for the week.
But let's see. Let's go to the SPX. Let's see. Yeah, it's not. Yeah, of course, it's not open yet. I'm trying to see. Here, the spider. We can look at that, and we can see that for the spider. We expected, well, the pre-market value is lower, so we're expecting it to possibly, gap lower. Let's see for the QQQ. That's the Nasdaq, and we're expecting the same thing. The pre-market price is at 310. So the market is sort of, it can gap lower and still, recover and trade higher. Just because it gaps lower on the open doesn't mean that it's going to remain lower. But then let's go to Diamond. That's the ETF for the Dow Jones, and with Diamond, we can see that it has a gap lower as well. And I think the Russell is a WM. I shows Russell ETF, and we're seeing the same thing as well with a gap lower. So we can expect markets to gap to the downside, but I don't know. We may see the market surprise us and close with higher gains later before the close. Usually you see that profit taking an hour ahead of the Wall Street close, so we can get that later on in the U.S. afternoon. But yeah, that's pretty much it. Like, if you guys don't have any questions, then we can just pretty much, I guess, close out early.
Yeah, yeah, I think we can close out, for today. So yeah, we'll let you know the outcome of that trade in the group, and we'll keep you posted on everything. But yeah, that's it. So since we don't have any more questions, I guess we could end as we always end. Remember to always count your blessings, not your pips. And we'll definitely see you guys soon. Thanks a lot for coming. We really do appreciate you guys. And we'll definitely talk to you guys later. Thanks, Rod, for coming. Thanks, Greg. Thanks, everyone who is in attendance. We really do appreciate you guys. Thanks, Stuart. Also, if you didn't get into the Discord group, make sure you do that soon, because as we mentioned before, we want to slowly transition over to that. We're also going to add the videos that were, on the website into that group. So then it'll be a one-stop shop for everything, within this group. So then, make sure you do that whenever you can. But all right. Thanks again for coming. We really do appreciate you guys. And as always, stay blessed, stay encouraged, and we'll definitely talk to you guys soon. All right. Okay then. Bye.